Hi everyone, time for an update. I didn't do a video on Friday, but if you remember last week, we just had a long run of losses. Price was chopping around above and below the moving average, and we took seven losers and one break even last week, so -7 are. On Friday, we price pulled back up to the moving average, and we had this kind of very slight lower low set up here. I'll take these. I'm not choosy really. I'm just looking for a hint that momentum is heading in the direction of the longer term trend. So I'm just looking for some short term momentum in line with what the moving average is telling me. And price did spike down to 3R here, so I just moved to break even over the weekend and left it there. This morning price broke down again, and so I look to lock in some profit and trail my stop. The obvious last swing point was here, where price made a new low. This was the high that pushed price lower, and as we've got 5R profit on the table now, I'm going to start trailing my stop much tighter. And I could have trailed tighter here and got taken out with 1R, which in the long run is going to give you a higher win rate, but it's going to give you lower profit. So I'm initially giving a much wider trailing stop and then tighten up as price moves on. You have to find your kind of comfort point here of how many consecutive losers you can live with. Like last week, 7 consecutive losers. For some people, that is going to be too much to bear. In which case, then perhaps you need to reduce your target and trail a bit sooner. I think with any of these choices, it's a case of pain and gain, how much pain you can take and how much gain you're expecting to make in return. So with this, I'm kind of going for something. I'd kind of consider this kind of sort of middle ground, really. Not aiming for massive returns, but using a trailing stop. So when I do get taken out of a position, you can see here, price is starting to make high highs and high lows, if you like, going counter trend. Okay, so if I get taken out when price is going counter trend, then if it does return to the longer term trend, it will often give me a chance to get back in. So this means that when conditions are perfect and price does just go in a long sustained trend, I can try and to some extent the strategy is going to let me get in at the highs, get out at the reversals, and get back in at the highs again. Okay, that's the idea. And obviously no one particular combination of entry pattern and exit pattern is going to be perfect, but if it's got a pretty good long-term expectancy, then that is something worth persevering with. As long as you get it straight in your head that you're never going to get the maximum, the optimum out of every move. Okay, you're just looking for something that's fairly robust and fairly simple to execute over a long run. And then you can weather the periods like last week where price isn't trending and you take consecutive losers. You can see just my first trade this week has nearly cleared all of those losses from last week. If I take if I get another win similar to this, now I'm in some fairly decent returns after only a short run of trades. You can see how the math works here. But for the math to really pay off, you need to repeat this over a lot of trades, and you also need the particular market you're trading to play along, and that's one element we don't have any control over. We can pick pairs like yen pairs that tend to trend fairly nicely, but we still can't guarantee it. So you need to be resilient and stick at these things for a fairly long run. So anyway, hopefully this it's dollar yen, sorry, will continue to trend down this week, and we'll get some more winning trades. Any comments, leave them below, and I'll speak to you all tomorrow.